Good day, my fellow Americans. So you've saved up and you're thinking of diving headfirst into the real estate market to buy that dream house, or even just a second property to flex on your neighbors. Well, slow down and let's talk about it. Remember ARMs, adjustable rate mortgages? Once seen as the money-saving hip choice for the savvy homeowner, but right now, you'd be hard-pressed to find any real savings going that route. The average rate on ARMs is dancing right alongside 30-year fixed rates, which means buyers, you're not really saving anything up front. And guess what? You still get the lovely gift of risking higher rates in the future. For many Americans, buying a home has become like trying to buy tickets to a sold-out concert, except instead of missing out on 3 hours of music, it's a lifelong investment. As Greg McBride from Bankrate put it, choosing an ARM over a 30-year fixed rate right now is a bit like gambling in Vegas, only with your house as the chips. And let's not even dive into the current home insurance landscape. Between sky-high insurance premiums and clever strategies to lower them, homeowners are now hiking up deductibles, sometimes prompted by the very insurance companies they're paying. And yet, even with these higher deductibles, your premiums might just creep up anyway. It's like trying to plug holes in a sinking ship using tissue paper. You're desperate to stop the flood, but it might not be the most effective solution. And speaking of things not being effective, remember when having home insurance was the standard? According to a recent Wall Street Journal article, as of June, only 88% of homeowners had insurance. That's a plunge from 95% in 2016. But why worry about the small things like potential damages? Look, I get it. The dream of owning a home is deeply ingrained in the American psyche, but dreams require planning, especially when dealing with potential nightmares like financial crises and unpredictable market conditions. Here are some action items if you still are set on jumping into the market. Number 1, financial planner. Consult with a financial planner. They give you advice tailored to your unique financial situation. Ensure that your cash flow planning is accurate and reflects your actual income and expenses. Number 2, a fixed rate mortgage. Now consider locking in a 30-year fixed rate. If rates drop, then think about refinancing, but don't place all your bets on the whims of the market. Number 3, insurance. Understand your home insurance policy. Know the deductibles, especially for natural disasters. And remember, it might be tempting to increase that deductible to save on monthly costs, but you need to ensure then that you have the savings to cover those unexpected expenses. Which leads us to number 4, an emergency fund. Always have an emergency fund. This isn't just good home buying advice, it's good life advice. Be prepared for unforeseen costs. If you can, try to save more than just your deductible amount, because when disaster strikes, you don't want to be left counting pennies. In the end, it's prudent to be smart, be cautious, and remember, it's not just about owning a home, it's about keeping it. I want to thank you for tuning in today. If you found this information helpful, please like and subscribe before you go. And as always, keep doing life better.